Jared Blikre is standing by for us down at the New York Stock Exchange. Jared.
That's right. Seeing a little bit of a bounce back right here. S&P 500 up 0.5%. NASDAQ outperforming. That is as the yield curve is actually shifting down, but also expanding. So that would be a bull steepener. Let's take a look. We're looking at the 5-year T-note yield. I want to take a look at the S&P 500 on the Wi-Fi Interactive, and you will notice that we are sitting at lows right now. If you take a look at the NASDAQ, we are sitting at lows that we have not seen in several years. So that is a concerning situation. We've been tracking all the volatility in the market. You take a look at the VIX, that is now above 30 again. That is a big red flag. Taking a look at the ICE B of A Move Index, that is also elevated, though still consolidating. Taking a deeper dive into that pattern yesterday, still some concern there. Also noting that the bond market has been causing so many headaches. It's really the worst start to the bond market ever, at least as far as several indices are concerned, and that goes back at least 30 years back into the mid-80s, I believe. Now, let's take a look at the US dollar index. That has been on the rise as well. That is a pressure point for lots of things, not only risk markets, but also cryptocurrencies, also multinational corporations, also emerging markets. And you take a look at a max chart of the Dixie here, and you are going to see we are at a very big level. We have just raced up to these levels here, but we could be seeing a dollar with a 120 handle. Think about that for a second. A dollar with a 120 handle, how does that risk get priced into the market, guys?
Yeah, and in particular, one of the things that's feeding into that dollar strength is euro weakness this morning. And we're getting more news out of Europe with regard to Russia's potential cutoff of gas shipments to places like Poland at the same time that Russia is saying it actually got some rubles for some gas shipments from other places. So it's a really interesting situation, Jared.
Yeah, it is. And let's keep in mind that wars have often been fought over who's going to pay for resources in a certain currency, and that also applies to US dollar. US dollar is the world reserve currency, as we know, so that is the denomination of WTI crude oil. That is the denomination of RBOB gasoline futures. That is a standard. Now, if Russia wants to get paid in these commodities, well, they have some statements about it. The leaders of these countries didn't want to. This is a senior leader at the Duma here. Let them explain to their citizens how they will cope with this and in whose interest they were acting when they made this decision. Why should they do the same with other countries that are unfriendly to us? So they could be cutting off gas supplies to Poland, Bulgaria, and you think this might spread? I think it could, because there have been rumblings that they want to pay, they want to also pay in Chinese yuan, or they want the Chinese to pay them for oil in the renminbi, in the yuan. And then the Chinese, by the way, have been facing a strengthening currency, which they have been trying to devalue. Put it all together, there's still a huge haystack here of potential, I would say, warnings for the market.